Want to know the top 5 myths that I see a lot of first time home buyers speak of? Stay tuned. I got you covered. Hello, and welcome back to another episode of Lynette Selby Real Estate. In today's episode, we are going to talk about the top 5 myths that I see a lot of home buyers speak about when they are thinking about purchasing a home. So let's get right into it. So the number one myth that I hear a lot of first time home buyers speak about is that you have to have perfect credit when you want to attain a mortgage, and that is false. You do not need to have a 850 credit score in order to purchase a home. There are a lot of programs out there, for example, your FHA financing, that will allow a home buyer to purchase a home with only a 500 credit score. Now, keep in mind that if you do have a credit score of 500 or so and you are approved, you will have to pay a higher down payment, which may cost about 10% of the purchase price. But if you have a credit score of 580, we're still speaking with FHA financing, and you have a credit score of 580, you may be able to purchase a home with only 3.5% down versus the 10%. So there are several options out there that will help you get approved for a loan without having a 850 credit score. The second myth that I see is that you have to have 20% down to purchase a home. And like we just spoke about, that is false. There are plenty programs out there, some where you don't even have to have a down payment at all. For example, your VA and your USDA loans, those are zero down payment. And then you have some conventional financing where your down payment could be anywhere from 3 to 5%. And your FHA financing, those can range anywhere between 3.5 to 10%, depending on if you have some lower credit scores. If you have lower credit scores with the FHA financing, you may have to pay a little bit more down, but still not 20%. Myth number 3 is that you have to have a traditional 9 to 5 job in order to qualify for a mortgage, and that is false. There are, individuals out there who don't have that traditional 9 to 5. They work for themselves. They are self-employed, freelancers, contractors, and there are a lot of lenders out there who will qualify them for mortgages. Now, the process is a little more strenuous. They are required to provide some additional information, but it is not impossible. The fourth myth that I see a lot of first time home buyers speak about, or I shouldn't say first time home buyers, that I see home buyers speak of, is that if you have student loan debt or if you have student loans, that you will not be able to qualify for a mortgage. And that is so false. You can absolutely qualify for a mortgage if you have student loan debt. Now, there are 2 things that you have to consider. One, you have to be able to, comfortably afford a home as well as pay your student loan monthly payments. So if if your income is enough to cover your mortgage and your student loan payments, then you should not have a problem with obtaining a mortgage. And the second thing is you have to be current on those student loan payments. So you have to make sure that you're paying them on time, they're not in default, and that you don't have the student loans are not in like a forbearance or anything like that. So if you meet those qualifications, if you can make that payment, if you can make your loan payment as well as a mortgage payment, and you are on time with your payments, then there's no reason why you cannot obtain a mortgage. And the fifth myth that I see a lot of home buyers speak about is not being able to obtain a mortgage if you have filed for bankruptcy or if you've had a foreclosure, and that is false. So if you've had a property that has been foreclosed, you can obtain a mortgage 3 years after that foreclosure. Now, of course, you have to make sure that your credit is at a good score, and your income and everything, your debt to income ratios are in balance. But if all of that is the case, then 3 years after that foreclosure, you can absolutely apply for a mortgage. And for bankruptcy, if you have filed for bankruptcy 2 years after you have filed for bankruptcy, you can apply for a mortgage. Now, like we discussed with the foreclosure, you have to make sure that your credit score is in a good place and that your income is in a good place, and you can afford the mortgage and all of your bills, and your debt to income ratio is balanced. But if all of that is the case, then you absolutely can apply for a mortgage 2 years after you have filed for bankruptcy. I hope you found this information useful and we were able to debunk some of the myths circling getting pre approved and pre qualified for a mortgage. And if you guys have any questions at all, just send me, you can send me an email or leave me a comment and I will get right back with you. Also, if you need any lender recommendations for especially if you're self-employed and want some good lender recommendations, let me know and I can get that information over to you right away. But like I said, I hope you've enjoyed the video, and I upload videos every Thursday. So stay tuned. Make sure you click that subscribe button and hit the notification bell so you'll never miss an episode. And until next week, I will see you guys later. Bye.